Hey guys, hope you're doing great. Welcome to our daily market update. Today is the 29th of September, 2017. We just ended the week, and surprise, surprise, we ended the week on a high. The S&P today, I know we talked about this yesterday. Give me some comments if you were able to capitalize it. And we did get a breakout in the S&P today for short-term traders. And I will tell you, this burnt me a little bit today. I was able to look at this as a good opportunity to see that it popped up as a head fake and then came down. So if you're just a breakout trader and you're just using these tops and bottoms, this is called stop hunting, right? They come up, stop you out, and then price comes down just to get you out of the position, and then boom, goes the way you thought it was going to go anyway. So I know that can be frustrating. When you're trading breakouts, one of the things to not allow yourself to do is to get stopped out of those little wicky moves like that, and that's exactly what happened in this case. We knew that there's no place to stop price from rising once it broke through here because there's no overhead supply to stop it. And so what happened is that it came to this little bit of overhead supply area, touched it, fell from it, and then used it all up. So this is a case where if you got wicked out the first time, you had another great entry the second time around because you knew that you used up all that supply the second time we came back into it. So just something to keep in mind going forward. So now we're at an all-time high. Certainly, like I said, not going to be looking to short anything when we're at this all-time high. When I look at a place to get long again on a little bit of a retest, I actually like this area right here for Monday. If there's any sort of a dip at all, which we may get one, we may not. So like this little bit of an area right in here for Monday on a little bit of a dip. So kind of keep that on your radar screen as we head into Monday morning. The NASDAQ, now, this is we talked a little bit about this level yesterday, and I don't remember if anybody, and I thought we had talked about that. We had this level on the screen yesterday, and so this hit the supply level at the end of the day, and like we said, we weren't looking to take shorts, but it is going to have to get through this supply level. Now, here's what I like about what we just talked about. I think this supply level could act as the catalyst to drive the market back down into this demand level, right? Think about that. If this supply level is enough to drop the S&P. Now, the S&P, all I'd have to do is drop back down into maybe this area here, 5960, for me to be willing to get long on it again. And because when I go to a 15-minute chart, you'll be able to see a little bit of basing in there, kind of equates with what we talked about in the S&P. So I think a lot of good opportunities for Monday pullbacks if they do come back to that area. Crude oil, two levels that I looked at for a long and for a short. Didn't come into either one of them. I still have some alerts set up for price to kind of come into those. So really nothing has changed from the prior day. Gold, we can see that gold actually had a little bit of a double bottom kind of pattern here. We hit here. I'm not saying it's a double bottom. What I'm saying though is that we were able to put in a higher swing low for the first time. Now that's on an hourly chart. So we put in a higher swing low and then also the lower swing low. So now we're in this kind of consolidation phase with gold. If I go to gold on a bigger picture, I can see that gold, like I said, still has a pretty strong downward trend. I'm still bearish gold more than I am bullish. I would just need to see a breakout before I'm going to get short on gold. Going into some, and these, I'm going to look at the same 8 things every day. I think it's going to be better for your trading, and I've certainly found it better for my trading to look at the same markets every day. So if there's something new that you want to look at, certainly let me know. We can, I'm not opposed to doing that, but I had this level here set up in the 10-year note. We didn't get back to it, but today we put in another really good level. So the level that we had there in the 10-year note doesn't die, still remains very viable and something that I would be interested in looking at. So for right now, I'm gonna wrap my lines around this zone here as a potential shorting opportunity for the 10-year note, and that would just continue us right in the downward trend. Now this 10-year note, interestingly enough, I don't have any really quality demand until down in here on the daily time period, right? So on the daily chart, I'm looking at quality demand down here on the daily time period. So kind of keep that area in mind. Looking at the Aussie, The Aussie level that we had outlined yesterday, price never came close to that level today. The euro level, now we talked about this euro level yesterday. We came into it and we came out of it. Now look at our arrival into this level. The arrival was fairly weak, and the weakness of that arrival tells me that it may not be something that I'm a huge fan of. So positions in, I don't feel very confident in the level. I will tell you, to be fully candid, I was not comfortable holding it over the weekend. So for me, it's kind of basically a break-even trade. And then on the Canadian dollar, this is my I missed it today, and I'm still angry about it. Here we had a clear breakout candidate, and it did break out, and it broke out and came down right to this little demand. You see this little wick right here because it hit that area of buying orders, and then kind of wicked back up, and then it fell from there. So this was a really good, keep an eye on this kind of a pattern, because this pattern, when it happens, is typically a good chance to get short on a little bit of a breakdown. So as far as going forward in the Canadian dollar, looking at this on more of a daily time period, a bigger picture, you got plenty of room for the Canadian dollar to fall until about here. You've got certainly this, this area right in here to pay attention to, but we've broken the upward trend line, right? So if I just draw a very basic trend line, we've broken the upward trend line. I got to make sure I connect my wicks or Bob Dunn will lose his mind. There we go. So our upward trend line right here has been broken, and we had 1, 2, 3 points to confirm, and then it broke on this point here. So definitely showing weakening momentum in the first place. And when I look at my momentum studies, and I'm not a huge study guy, but I do look at the momentum. The momentum on the Canadian dollar on a daily chart, I've got higher swing highs in price, lower swing highs in the MACD. That divergence is some fairly strong momentum indication that we've got some weakness kind of brewing inside of the Canadian dollar. So I'm still bearish overall on that one. It's a little, could be a longer term play as well. All right, so I'm gonna shut it off for the weekend. If you guys like this video, do me a comment, subscribe to the page, give me a like, give me a retweet, give me whatever it is you want to give. If you've got something that you want me to look at, let me know. So until next week, I hope everybody has a great weekend, and I will see you soon. Bye.